Hi, Sylvia. So everybody has been talking about leverage as a sort of a short-term solution. How do you think they can use it for a long-term perspective?
Hi, Jasmine. Thanks for having me. Sure, I'll give you some background on that. So, historically, clients and traders have come to Direxion for short-term trading tools. We have 3 beta products that are very powerful tools for tactical traders looking to express a short-term opportunity with the use of a levered product. So the way we view the world, though, is that there are sort of 3 types of clients. One is that short-term tactical client, who 3x is appropriate for. 2 is a client who has a medium-term time horizon, which would be something from a month out to 6 months. And 3 would be the long-term asset allocator that is looking for a position for a year plus. So how can you hold leverage? With that client, we introduce them to 1.25 beta ETFs. So if you look at markets historically, going back to 1985, the periods of net positive compounding and performance outweigh the short-term spikes of volatility. So what that means is if you're an investor and you're looking for long exposure to the market over time, which most investors do believe that markets rise over time and have large cap exposure, we suggest enhancing an allocation to the S&P 500 or your underlying index with a 0.25 beta point. So you have only slightly more risk to potentially get a significant return. And the way that portfolio managers employ that is simply to take a look at their long-term asset allocation model and say, I might have an allocation to S&P, to small cap and emerging markets, but I think that for the next 2 years, small cap will outperform. So I'll take that same $100 of exposure to small cap and invest in a 1.25 ETF like PPSC, for example, and have a 1.25 exposure so that in the periods of net positive compounding, they can essentially enhance their returns. The other side is simply portable alpha. So instead of using $100 to get exposure to S&P, small cap, large cap, emerging markets, developed markets, you would take $80 worth of the complementary 1.25 beta ETF and employ your $20 elsewhere into another strategy, asset class, or sector that you believe in. So they're great tools. They're great asset allocation tools, and they really give advisors the ability to sweeten what they already do with a light leverage point with a minimal added amount of risk.
Great. Thank you so much.
Thank you.